Yeah. Good evening. How are you? Welcome to the ShadowTrader video weekly for Sunday, February 24th, 2008. I'm sure that's the sentiment that a lot of you have been having. That's basically my sentiment on the markets right about here. I just go, because it's making me scratch my head a little bit, right? The triangle, wedge, whatever you want to call it, formation, for lack of a better word, that's been hanging out here, drinking stout, as I always say, for quite some time now. We still haven't resolved to either side. And on Friday, it looked as though we were going to resolve to the downside. And late day, in the last 45 minutes of trade, news came out that there may be a bailout of AMBAC, which is a big bond insurer. That's ABK. And you can see how their shares just ripped off this news. And the market seemed to think that this was a good thing. This would it was basically an injection of funding for them that would allow them to maintain their AAA credit rating status. Blah blah blah. Whatever. Remember, the reasons don't really matter. What we have to keep in mind is what the reaction of the markets was to the news. And the reaction was that it took a very negative day in the markets in the S&P when we were already down here, and if you look on your hourly, probing to new lows, right, breaking down through the triangle, coming to some new fresh swing lows, right, and then actually closed the markets positive, where the Dow ended up being up 96, S&P up 10, NASDAQ up 3, right? Move that back out of there. So what does this mean for the markets? Well, basically, I mean, the triangle formation that I've been talking about is still intact. We're still looking for a move here over 1370 to confirm some bullishness. And one of the things I wanted to point out is that I've been saying for a while, as this triangle has been forming, I've been saying, you know, I think it's bullish. I think it's bullish. And I know that goes against all the sentiment out there, but that's even more of a reason to say it's probably going to break this way. It's probably going to break this way, because you always want to kind of be opposite what the whole world is thinking. The whole world is thinking doom and gloom. So you got to be thinking, okay, well, all the bad news is kind of already out. How much worse can the news get? Eventually, the market will have to just shrug it off. That's the thing. Because remember, when the whole world is thinking bearish, that's the best time to be bullish, and vice versa. Okay? So one of the things that I'm taking a look at here that might be supporting this is not only obviously the pattern, but you have to look internally what's going on underneath the pattern. So first thing that comes to mind is to look at the breadth, which I'm such a big believer of. So I got to bring this over here. And I look at this line here, which is the U-vol-D-vol ratio. And this is a 60-minute chart of the spider. And notice that when the market here, spider came down into 1333, which was roughly 1330 on the S&P lows, you didn't have new lows in the breadth. This is a relationship between the up volume and the down volume. Basically, it's a ratio where you take the up volume and you divide it into the total volume. And obviously, if that number is 50, half the total volume, then the volume situation is at parity. And when that number is over 50, then you have positive breadth and underneath. And so the first area of divergence, so to speak, that I want to point out is that when we made fresh new lows here, you didn't plunge any lower down here. You see how these areas here are slightly higher than down here when we really spiked down here in this hour here? There was some selling here, right? And in general, the markets didn't. This usually, if you have heavy selling and it's panic selling down below an area here, you'd get even more of a spike down in the breadth, which we didn't get. Okay, so that's the first thing that I'm thinking. The second thing is, if we look at the advanced decline line, right? Note that here, right, down up in here. Okay, again, this is an hourly, so I want you to keep in mind these dates here. All right, in here, you made lows of advancers and decliners as low as 1500, right? But down here you hit the 2000s. But the market was lower in here, right? Remember, go to the 60. Market was lower in here. Yet the relationship between the advancers and decliners, right? Not as many. This basically, these negative numbers here. This means that 1,500 more stocks on the New York Stock Exchange were down ticking rather than up ticking at that given moment when it was plotted on the chart. So that's also positive divergence. Remember, when the market goes lower and your indicator doesn't, it's probably going to turn around the other way. Okay. Now, last but not least, I want you to keep an eye on this. Okay. Look at the triangle. So basically what we have is a major situation here where it's just basically this, right? Is it this way? Or is it this way, right? So while all this is happening, we're keeping in mind that internally, market fell down in here, and yet the internals didn't go lower, and then this news pushed it higher. So we looked at that, we looked at the AD line, and the last one I want to look at is the VIX. And the reason I said to pay attention to, to look at the pattern is because I'm going to leave this on a daily, and then I'll put the VIX on a daily, right? So look what's been happening is that this is kind of a gauge of fear in the markets, and yet this is making a descending triangle, which is indicative that this indicator here, that the VIX wants to break down. And yet the market is telling us it doesn't know which direction it wants to go, right? It's one big crapshoot. So these are these are basically three things I want you to keep in mind, that as we've been forming this triangle, the VIX has been moving lower and lower, which is bullish. The AD line, right, did not go as low in this area when the markets plunged lower. When the markets, when it was apparent, when it looked like the markets were going to fall out of bed here, and they did intraday on Friday, we didn't go lower, and the breadth situation, as I showed you. All right, let me see here. And the breadth situation didn't go lower either. So you got the VIX, the breadth, and the AD line all kind of showing us some divergence. All right, that being said, the main thing to consider is, as I've been saying all along, is none of the bears are going to be shocked and awed into covering until these lines are crossed. Remember that. So keep an eye very closely in this week to come on the 1370 here, right? And we'll see if we can break up and over. If it does, I would say that the usual suspects of probably sectors that you would not expect to perk up, such as banks and financials, will probably be okay. I'm seeing a little bit of action in real estate. Okay, look at this action here. This strikes me as a pattern in this real estate index that will not break downward, but will probably break upward. But it'll be easy to know if you watch this index. If you can cross over the 240, then you may have a play in, like, say, IYR, which kind of covers the whole thing. Brokers I don't like as much, I'll be honest with you. In the financials, I'm more thinking about banks. Just because when I look at the components, this doesn't really interest me that much. It does look like there's reversal bars forming, but like GS, Merrill, they just look relatively weak to me. I'd be more interested in banks, as I said. Look at BAC here on a weekly. See how this is so high and tight, how you had this, you fall down here really, really nasty, and then it move up. And then since then, you haven't really pulled back at all. So I'm thinking over last week's high. BAC, Citigroup, which I know, a lot of you might be thinking, no way, this is so ugly. But again, it's a similar thing. When you see the sector, BKX, start to perk up, then there may be some more there. There's also some action brewing in railroads, which is basically off the heels of the transports, which look really, really strong. So I want you guys to keep an eye there. Transports. The railroads actually look better than the transports, don't they? I mean, the last chart I showed you, DJUSRR, railroads actually look better, but obviously they fall under transports. There's a trucking company called Conway. That's probably the last one I'll leave you with that I think looks decent here. CNW, this is trucking. Keep an eye on this. Cross up over this area, right, to break this downtrend off this very minor pullback after a strong volume move up. Look at the nice big volume here as this stock moves up. Crude's $100 a barrel. Go figure, right? I mean, like I said, I don't even pay attention to the why, because it doesn't make any sense to me. So who cares? Just go by the charts. The charts will show you what's going on. All right, that's all you need. That's all I got for this week. Let's see which way we break. Remember, 1370 SPX. Let's see if we see some fireworks. If there, load it up a little. I would say at the very least, get some longs on here, because people are probably going to be surprised that this market's not going lower. All right. We shall see. On behalf of myself and the entire ShadowTrader team in beautiful Philadelphia, Pennsylvania, and of course, as always, all the good people in Chicago, Illinois, at the one and only Think or Swim, I wish you good trading and good night.